Hey everybody, welcome to Money's No Object. I'm your host, Dylan Howell. This is episode number 17 of our YouTube channel and podcast. And I could not be more excited to continue talking to you about personal finance topics and really digging into the things that are impacting your personal financial life. So let's jump into it today. And today we're going to be talking about insurance and the role that insurance plays in your financial life. We haven't given a lot of attention to this yet, but it is so vital to you being able to protect yourself from things financially that could harm you. So we're really going to jump into that place today, and hopefully you can take a lot from this video and move forward with confidence with the insurances that either you have or the ones that you need to get. Before we jump too far in, if you could, if you're watching on YouTube, go below and click the big red subscribe button, like this video, leave me some comments, some feedback so I can get back to you and we can have a dialogue about the things that I'm talking about in this video, or if there's anything you want to see, leave it down there. Also, you can subscribe to the audio version of this show, the podcast version, at Apple Podcasts or on Spotify. So I would implore you, if you just want to listen and you don't necessarily want to watch, then you can go there and do that as well. Also, go follow us on social media. A lot of good stuff that I put out there daily, and you can go check that out at MNO with Dylan. Also, if you want to check out the financial coaching services that I offer, or learn a little bit more about me and about what I'm doing and the vision that I have for this, then you can go to my website, www.mnowithdylan.com, and check out all those things there. So let's just start here. What is insurance? So I like to think of insurance as just protection against tragedy. And because why do we buy insurance? We buy insurance to make sure that if something bad happens, that we don't have to pay the financial penalty of that bad thing happening, or that thing that we couldn't necessarily control. And so there's two major types of insurance that we're going to talk about, and those are property and casualty, and there's life and health. There's those two major buckets. The property and casualty side is going to cover individuals for losses that they may incur, and it's individuals or businesses for losses that they may incur due to their assets being damaged, or financial issues, or whatever it may be. So for instance, an example of property and casualty insurance is your car insurance. That's a property, right? It's something that you own, and that if you were to get into a car wreck, you expect the insurance company to cover because you pay those premiums. So that's a particular example there. And then there's life and health, and those prevent individuals from losses due to sicknesses and death and things along those lines. Those are pretty obvious. It's right there in the name. Your life insurance and your health insurance, those fall into that particular category. And there's a lot of other insurances that go in there, but those are the major two. And both of these, the property and casualty and life and health, they're ways that you can be covered financially. And there's certain ones that you need, certain coverages that you need, and there's certain that you don't. And we'll talk about that today. So insurance is nothing more than a contract, right? And that contract, it takes the risk that you were originally taking on, or that a business was taking on, and it transfers that risk from you to an insurance company. And what that company does is they collect small amounts of money from the business or individual, and we call those premiums, right? They collect small amounts of money, and they pool that money, and they use it to pay for the particular events that happen that they have to cover, and the risks that they have to cover for individuals. And what these insurance companies do is they use probabilities and statistics and these tables that help them to determine, based on a lot of different risk factors, what you should be paying and what they should be covering, and all those types of things. And so they're constantly playing the probability game against you, and they do win at that game. And that's why it's so important to take a look at your insurance coverages, because the insurance company may be making more off of something, or giving you coverage that is not worth the small amount of risk that you could take to not be covered in that place. But on the other hand, there's other insurances that are so important and so vital that no matter what place you're in, you need to have it in some way, shape, or form. And these premiums that you pay to the insurance company are all based on those probabilities that I was talking about. And so if something is more likely to happen, so for instance, if you buy life insurance and you are in your 50s, you're going to pay significantly more for that life insurance than somebody in their 20s or 30s would, simply because you are more likely to die, especially if it's a term life policy. You're far more likely to pass away and them have to pay than the individual that's 20 or 30 years old. And even if it's a whole life policy, even if it's something that's going to go the length of your life, then you still pose a bigger risk because it's money that will be due sooner than for the younger individual. So let's talk about a couple of insurances and insurance coverages that you need because they are a necessity and they are things that are mandatory in most cases. And so we'll start just right off the top, right? Auto insurance, right? You have to have car insurance. Do not drive around uninsured because there's no telling what could happen that you could be on the line for financially. If you just want something really basic and really simple to cover you because you're in a good financial place and you can cover other I understand that, but don't ever ride around uninsured because that can just create such a big financial burden. And the reason that we're even talking about this today is because what insurance does is it protects you from tragedy. And so we don't want these tragedy type things to impact our financial lives a lot. And in order to make sure that that does not happen and that we don't have these big emergencies and these big things that impact our financial life too heavily, then we have to insure ourselves against them in some way. So just to give you a little bit of context, the average insurance claim on a car accident or some kind of auto claim is around $5,000. And that fact alone should tell you a lot because most Americans can't cover a $400 expense. So if you're riding around uninsured and something worth $5,000 occurs, then how do you expect to cover that if you can't cover $400? So that's a big issue. Now let's talk about the different types of car insurance that you probably have or that are offered to you. So there's liability coverage. So that's obviously if you were to be at fault, then it covers you. It covers so like if I get into a wreck with someone and I cause damage to their vehicle, it was my fault, then my insurance company will pay for their vehicle and their expenses. And so that's kind of a baseline, the liability. And then past that, there's collision. So if there's any damage due to a wreck to your car or things like that, they'll take care of that if you have the collision coverage. And then there's comprehensive, which takes into account the other things like vandalism and getting your car broken into and things like that. So those three big buckets, and I don't want to dig too far into them, but you need to have them in some way, shape, or form, because if not, you're going to be in a tough financial place if something were to happen that you didn't expect. And like I said, you need these car insurance coverages always. You always need this no matter where you are financially. Now, if you want to really raise your deductibles, which will allow your premiums to drop. So the deductible is how much you have to pay before the insurance company will pay. So that's basically saying I'm going to insure myself more. And obviously, if I'm going to insure myself more, then the insurance company has to insure me less. Therefore, I pay them less money. So you can do that to cut down on your cost of insurance because you can cover yourself. But if you're still in a place financially where you're just starting to build and you're just starting to try a plan and try to do something productive, you do not need something like a car accident to set you back. So be covered, have this covered, and don't worry about it. Then there's also homeowners and renter insurance. And so just like car insurance, just like auto insurance, this is also a property and casualty insurance. So it falls into that bucket. And so this is going to cover your home in case of some kind of issue or or damage or disaster, and it can cover many different things. But this is something that's often mandated by mortgage companies, and it's required. It's something that you have to have. And so if that's the case, if you do have to have it, then you need to make sure that all the coverages that you need are in place. And based on where you live and the particular risks that you could have, you can add or subtract different things like earthquake or tornado coverage or flood coverage or whatever it may be. You never know what's going to happen, and especially early in your financial life, you want to make sure that you can cover what you need to cover. Now, homeowners insurance is far more expensive than a renter insurance policy due to the fact that they're covering your entire home, your entire dwelling, and they're covering from many different things. And they're actually covering what's around you, not just the things that you own. So renter's insurance is a big deal because it will take care of all the things that you own that are within a place that you rent. Because wherever you're renting, they have this homeowners insurance, quote unquote. They have this property insurance, right? And so the building is insured, but that money's not going to you. You're paying for the renter's insurance because you're just paying your rent. You're paying to live there, and so you just want everything within to be covered, the things that you own to be covered, and that's a really important thing. It's really, really cheap. So I would say in both of these cases, the requirement of the homeowner's insurance and renter's insurance in most cases is required too if you're renting. But if it's not required, I would say you need to get that because that's very important, and the renter's insurance is very inexpensive in order to maintain a solid financial place just in case anything happens. So, if you're renting a home and they don't require you to have renter's insurance and it gets broken into and you get your stuff stolen, well, that's kind of on you because you didn't insure yourself well. You didn't cover yourself well. So make sure those things are taken care of. Then let's jump into health insurance. There are so many bankruptcies in the United States every year that are caused by medical bills and are caused by owing money to hospitals and debt collectors that are from medical bills. And so since this is the case, since we know this is the case, we need good health insurance. Just one unexpected major medical emergency could be hundreds of thousands of dollars. If you have cancer, if you have any number of major issues medically, then it can cost you tens of hundreds of thousands of dollars in some cases to pay for that thing and to cover that thing. And we don't want to be in a place where we're not good and covered in a lot of different health areas. And so there are some things that are just going to be costly, and that's just the case. But don't have yourself in a place where you don't have the correct insurances and you don't have the correct coverages in place, and you're struggling to make payments and pay off debts because of that. Yeah, there are some bad medical insurance plans out there, but if you can find one, especially if you can find a good high deductible HSA qualified plan, I typically find that those are the best and help to cover you the best and give you the most flexibility while still covering you from the risks that come with health issues. And so if you can make sure that you have good medical coverage, good health insurance coverage, that's so vital to your financial flourishing. You need this, and you always need it. And don't ever take for granted your health or the ability to do the things that you do, and because you never know what life's going to throw at you. And I don't want to fall behind financially because life throws a wrench medically at me. So just make sure that you're covered well. There will be some things that are expensive. That's why it's so important to have emergency funds set up, and that's why we talk about that because there's certain things you're just going to have to pay for. Then we jump into life insurance, and you need life insurance. If you are someone who someone else relies on for income, then you need life insurance. If you have kids, if you have a spouse that relies on your income, you need life insurance, and you need term life insurance. Whole life insurance, universal life insurance, far too expensive for you to be dabbling in, and there's far too many downfalls of those particular insurance policies. There's no reason to have savings within your life insurance policy. I need a life insurance policy so it will cover me in case I die. It will pay a death benefit tax-free to my beneficiary if I were to die. But I don't need a savings aspect. If I'm going to save and invest, I will do it in good investments. I'm not going to do so within a life insurance policy. Where do you think the money is going? Where do you think they are making money on this? It's because they're charging higher fees. They're charging you more money in order to provide you something that is not necessary and is not something that you really need, because there are other places where you can do this more efficiently and more effectively than in life insurance policies. So just ask yourself the question, if you're saying, I don't need life insurance, what would happen to your family if you were to die today? Would your family be able to go on living the life that they live in a similar way if something were to happen to you today? And if the answer is no, then you absolutely need to have life insurance. And even if you are someone who is the stay-at-home parent, you're a stay-at-home mom, a stay-at-home dad, there still needs to be some life insurance on you, because if you're staying at home and keeping the kids, well, what happens if you were to pass away? Well, then there becomes this big bill of childcare. And if that's going to happen, if there's any chance, and there's always a chance that something happens to somebody, I want to be covered in some way, shape, or form to make sure that I don't have to incur those financial costs or put those financial costs on my spouse long term. So just make sure that you're covered if somebody is reliant on your income or the service that you're providing. And I would say when you're looking at term life insurance, and we'll dig in more later to term and whole life and what to do and what not to do. If you're looking at term life insurance policies, look at a 20 or 30 year policy, because if you're following the financial action plan steps and you're doing good financial habits, then what you will find is 20 or 30 years down the road, you'll be self-insured. You're going to have wealth accumulated, and you're going to have money sitting around to where you don't need, a large amount of life insurance money laying around. And the life insurance should be large enough that if it's to replace your income, that your family can do so. So what I would say, just in general, is if you can find, affordable life insurance that the death benefit is 10 times your annual income, then that'd be great, because if nothing else, if it were never invested, if it were never growing, then your family could live 10 years at the exact same rate that they did prior to you being gone, or prior to the individual being gone. And just something that we want to do, we want to invest this money. We want to make sure that it's growing for us. That way it can last longer than that 10 years if needed. And so having life insurance is key. Term life insurance is the way to go. It's the more affordable and logical option long-term for you. Then a couple other types of insurances that I want to cover. So there's long-term disability insurance. So what this does is, if you're unable to work for a long period of time due to some physical disability or mental disability or whatever it may be, it will make up for your loss of income. And so that's a really big deal. Short-term disability is not really a big deal in most cases, but having that long-term disability in place is very important, because we want to make sure that if something unforeseen happens and we can't control our ability to go back to work, then we want our income taken care of in that place. Then there's also long-term care insurance, which is also a big deal, especially if you haven't amassed wealth of a certain amount. So long-term care insurance is really good for those people in the middle. And this is what I mean. So if you don't have anything, if you're really poor, if you don't have any money saved or anything like that, and you need to be put in a nursing home at some point, what's going to end up happening is Medicaid ends up covering that, just due to your lack of assets and lack of income and lack of all these things. Then Medicaid will cover it with some caveats, and I don't like that option, but it's a reality for a lot of people. Well, then people who have a lot of money, who are extremely, I don't want to even say extremely wealthy, but are just well set for their financial future, probably don't need long-term care insurance either, because they can afford to pay if they need to be put in a nursing home, so they can afford to pay out of pocket. It's those in the middle who it's an issue for, because first of all, Medicaid's not going to cover it, and if you paid yourself all the way down to do Medicaid, then what are you doing? You're giving away basically everything that you have in order to get to a point where the government can take care of you. No, I want to be able to take care of myself. And a way that we can do that is through long-term care insurance. And so you pay these premiums. The premiums are pretty expensive, and you don't want to get it too early, because paying high premiums for a long period of time for something that you don't anticipate to need at the given moment is something that could be really costly. So just right around the time that you're hitting your mid to late 50s into 60, start thinking about long-term care insurance and getting a policy. And that's really going to cover you well. That way, you're not spending all of the money that you have amassed over time on a nursing home stay if you were to need one. Then there's umbrella insurance. So umbrella policies, they're just like an extra layer. They're an extra layer of coverage around your personal liability and things like that, that will help take care of you in the event of a major car accident that's your fault, or different things like that you may need more than the coverage that you have in that place. And this is really important for individuals with higher net worths. So if you do have a lot of money, having an extra layer of insurance coverage as an umbrella policy is a big deal. So this is really needed when you need coverage past the limits of your auto insurance or your homeowner's insurance. That's where it really does the most damage to you financially, if those limits are beat, because those expenses can pile up really quickly. And so having that extra layer of umbrella policy is very important, and it's very inexpensive as well. So if your net worth, let's say, is around the $500,000 area, maybe a little less, a little more, you can do this as well. Then I would say then definitely get some kind of umbrella insurance policy. And as you get higher net worth, you're probably going to need more coverage in those places. That way you're not taken advantage of if something were to happen in a car accident or something with your home or something like that. So then real quick, let's talk about some insurance coverages that I don't like and that you don't need. We already talked about whole life insurance. Too expensive. You shouldn't be saving in a life insurance policy. And the most of the money that you're putting in, at least initially, are going to fees, and they're going directly to the insurance company, and they're not going into your savings aspect of that just yet. So I don't think that it's worth it. In 99% of the cases, it's not. And so stay away from whole life, universal life policies in many instances. I would say if you're even thinking about it, it's probably not good for you. And how messed up is it in most cases when they're paying out the death benefit? Like if you have all this savings in a whole life policy and you were to pass away, well, in most cases, they're not going to pay that cash to your beneficiary. They're just going to pay the death benefit. So that's a bunch of money that you saved that you're not going to get back. Anyway, I want to keep my money. I want to be in control of where my money goes. You can invest in good investments. Don't try to invest in insurance policies that are laden with fees and not going to give you the same returns. Then life insurance for kids. I don't like when individuals buy life insurance for their children. Because there's an issue there. Do you rely on that child for income? Well, the answer is no. You don't rely on that child for anything. You're having to support that child. So buying life insurance for them is not a really useful thing, especially if you're building up your emergency funds already. Then you don't need any kind of rider on your life insurance or anything like that for your child. Because you have an emergency fund saved. If something tragic were to happen, you can take care of it. So don't get life insurance on your children. If you want to save for their college, do so in educational savings accounts, 529s, things like that. Don't do the whole life insurance, whole life policy with, for your kids. You've seen the commercials for them. Don't do those things. Really just focus on keeping insurance, and investments, and know that the insurance aspect, when you're looking at life insurance, is do I rely on the utility brought by this individual? If the answer is no, which it's no with your children, then they don't need life insurance. Then accidental death policies, that's not even going to be necessary if you have a good term life policy in place. It pays upon certain death experiences, and we don't need that if we have a good term life policy. So just why would you double insure yourself in that place? It's not really important to do so. So I would stray away from those as well. Then there's also mortgage protection insurance, which in theory sounds like a good idea, right? It'll pay off your mortgage in the case of you having died, or your spouse having died or something. If they have mortgage protection insurance, then the home gets paid off. Oh, great, the home gets paid off. Well, if you have good term life coverage, once again, why do I need this extra coverage on top of that? If my term life policy is enough to pay my mortgage off, or is enough to sustain my lifestyle, then why do I need that to happen? So don't get in bed with a mortgage company there. Just stay away from that particular type of insurance coverage. So a couple of just quick tips that I want to give you as far as your insurance coverage. Always shop your insurances. Don't just look at one agent or one company and say, well, that's the best that can be done because that's the only place that I went. No, make sure that you're shopping and comparing, because you would be surprised and maybe you won't be surprised at the differences in premiums for the exact same coverages at differing companies. So just be diligent about checking things out and making sure that what you're paying is what you should be paying and not a dollar more. Then also use an agent if you need help. So try to find some kind of independent insurance agent that can offer you a selection of companies, a selection of products. That way they can help you with the shopping and comparing, and they're not just pushing a product that maybe for a particular company that is too costly or something like that. So really, I would suggest that look for an independent insurance broker that can help you to find the insurance coverages that you need. And that is if you need this help. A lot of people do need this help, so find an agent that is independent that can help you in that way. Then lastly, don't be insurance poor. Insurance is important, and insurance is such a vital part of your financial future, and it helps to protect you from tragedy, and it's a big thing. It's a big deal. But I don't want you to be in a place where you're spending so much on insurance that you can't take care of yourself, and you can't invest for the future, and you can't build wealth, and you can't get out of debt, and you can't do all these things that I laid out in the financial action plan. Yes, there are insurances that are necessary and insurances that you have to have and that you need. But like I said, don't pay a dollar more for equal coverage than you have to. Just pay what you have to pay, but not a dollar more. So just make sure that you're being very diligent. Ask yourself the questions on if you need certain types of coverage. Like I said, there ways that you can look at insurance coverages that will tell you if you need it or not. And there's certain things you just don't need, and there's certain amounts of coverage that you just don't need because you have, emergency funds saved or you're covered elsewhere or things like that. So really take a critical view of your insurance coverages and see what's needed and what's not, and trim the fat if needed. So insurance is just so important to your financial plan. It's so important to your financial life because it's going to help you to keep the most income that you can long term. Insurance is going to help you keep the most money that you can, and it's going to help you to insure against tragedy, but don't put your finances at risk, having to pay too much for insurance, and also don't put your finances at risk with not paying for insurance for something that could actually occur. And along those same lines, just because something has a probability of occurring does not mean that it's enough of a probability for you to get insurance coverage for that thing. In many cases, you can control what the outcome of tragedy is. And that's what I want you to do with your insurance coverages. Make sure that you're setting yourself up or setting your family up well in a place where they can do good things financially, even once tragedy has struck. And I know that emergencies occur and it's tough and it's costly, but you need to make it as cost effective as possible. Insurance will help you do that. Insurance can keep you from doing that as well if you're insurance poor, but insurance will help you do that in most cases. So make sure you're covered in the right places. And if not, or if you don't know, you can get with me and we can take an objective look at your insurance coverages and just kind of see like, what do you need? What do you not need? You can sign up for the insurance primer financial coaching service that I offer. So you can go to www.mnowithdylan/workwithdylan and you'll see the insurance primer choice there. That's a particular option that I have. and we can look at the insurance coverages that you have and the things that you may need and how much you may need, and walk through those things in much more detail than I did today. So hey guys, thanks again. I'm really appreciative for you all for listening to this show and this particular episode. Hopefully you learned something about insurance. Hopefully you're going to take a more objective look at what your insurance coverages are and how you can tweak them moving forward to be most effective and efficient for you and your family. Don't forget to subscribe to my channel, like this video, leave me some feedback in the comments, follow me on social media at MNO with Dylan. Check out our website, www.mnowithdylan.com. And also, if you're listening on the podcast, I appreciate you. If you're not and you would like to, you can find it at Apple Podcasts or Spotify Podcasts, and you can subscribe there as well. So tune in tomorrow as I dig into what is investing, what investing really is, what it's about, and how you can grow your money forward in the financial action plan, because there are investing steps, and I want you all to be able to do those as best as possible, because those are going to be the steps that allow you to build long-term wealth. Also, be looking out Saturday if you missed some of the videos this week, or let's say you missed a video last week. I put a weekly rewind out on Saturday, and I'll put one out this week as well that'll cover the broad topics from the week that it follows. So I want you guys to check those out, and if you missed anything and then you want to go back, you can find those things there as well. So hey, thank you guys for tuning into this episode of Money's No Object. I'm your host, Dylan Howell. God bless.